Okay guys, had a message from Baldy Locks regarding, I'm assuming it's carbon emissions you're looking at, but the principle I'm looking at will work across pretty much any market you're looking at, so it doesn't really matter. Now the question, you sent it to me on WhatsApp, was how would I be looking for potential turn in a market? Well, there's a number of ways you can do it. First of all, you need what your normal direction is. That's what the indicators are going to give you. They're going to give you the direction. Then you've just got to sort of ride it out. Now, there are certain criteria you can look for. Now, if I flick this over, one of the first thing that I'm looking for, if I just drop indicators on and I sort of take these two out, I will watch this so I can see potential turns. If this is extreme, there's a turn on the horizon. Why? Because it's fast setting and it's coming. All right. And sure enough, if I line that up, it turned. You line that up, it turned. All right. But it's why you look at multi-time frames, multi-analysis, all of that, and you see that with 3-click. Okay. If you understand 3-click, you get your direction, and you only go in the direction that tells you. Now, if I get this out of the way, there is another way you can do this, where you can look for scalping and key turning points. Now, if you're on an hourly chart, you can see the motion of the market and you can see what's going on. Well, in this particular motion, so that's 10 o'clock, this would have been the surging candle from the open. So it's an open up. Look where it's stalled. It's stalled in and around this level. How high could it go? Well, we don't actually know. And then this comes into another principle of +1, -1. You can go up a frame to have a look, but when you want to get into the nitty, you drop down a frame. So if I drop it into 15 minutes so I can see what's going on, and I'm looking for key turns in the market, well, you can either look at this drive and then look to see where the break at the top is and then work out where a 127 is. But if you look at the last drive in the direction of the move, it'll show you. So there's the move that's in motion. We didn't know this was coming because this wasn't there then in here. That was the last downward move. So what was the last upward move? That one was here. It's only shallow, but it came back up, collapsed. So it's really whatever the bridging of this is. So if I do some form of retracement on here, now I'm going to alter this round and flick it to the upside. We can see went up, smashed through there, came down, stalled on that 127, right? So that's a key turning point. Came down, stalled again on the 161, pushed through, found levels down here, but this is where this gets a little bit interesting and you can kind of see what's going on with the market. It's stalled back on that level, back to the 161, back here, back to that level, and then carried on. Look at the fibs. Each fib line from that move was respected, every single one of them. Right. So if I'm expecting a turn, if I turn this round just so that I can kind of see what it is. There's the 100. There's the 127. Just draw that in. So there's your 127. And then directly above it is the 161, as you can see, which is there. So 127, 161. I'm going to take that away. Let's have a look, see where the price is. Well, shockity shocks, it turned bang on that 161. It was either going to turn on here or it was going to turn on there. What did it do? Well, that was a singular candle, came right through and it stopped dead on it, came back, it stopped on the 127 and then it came back down. And I bet you if I draw a line from the top of that move, like where I would be drawing fibs, there's probably a stall point in and around this as well. There it is there. Right. So is this a way of showing key points. All that does is it gives you a map. Now, if you've got your levels in your maps, you don't need your indicators. You don't need any of the fancy candlestick patterns. Why? Because none of the fucking things work. None of them. Right? They're exactly what they say they are. They're an indication. You can have an extended candle. Doesn't mean say it's going to retrace on it. You can have a fair value gap. As we've shown many times, it's good sales guff, but they don't fill. Not as often as you think. So what you're looking for is a key direction. Am I going to sell it today? Am I going to buy it today? That's it. Doesn't matter whether you're a buyer or a seller. Doesn't make any difference. Then you just look for a logical key point where you want to get in. If you think this market's pushing up and it's getting to the outer limit, you start selling on the 127 up to the 161. Gets through that 161. It's got a hell of a long way to get to that next fib. You're probably wrong. So you can catch the bounces. If you're going with the trade, do it in reverse. You start buying at 100, 76, 61, 50 with a view to get out either on the 100, the 127 or the 61. Just depends on what your definition is. So I hope that helps you, Baldy. Catch you soon.